Hello, pembelajar online whom I love wherever you are. Today, I would like to discuss some more interesting financial management area. But before that, do not forget to subscribe, like, share, and also follow my YouTube channels. My name is Dadang Prasetyo Jatmiko, a PhD graduate from Cardiff Metropolitan University in the UK, and I'm an expert in financial area. Please stay tuned. We'll be right back after this moment. Yes, all right, ladies and gentlemen. So today we will discuss about EVA or Economic Value Added Analysis. EVA or Economic Value Added is an estimate of a firm's economic profit calculated after deducting the overall opportunity cost of all capital being invested, equity, and also liabilities. EVA is considered unique in combining the efficiency of income, asset management of balance sheet, profitable growth, and strategic saving to produce one net worth that can determine. EVA is measured consistently by eliminating a set of accounting distortions that weakness the reported accounting metrics. EVA treats the rental asset as if they are in its possession, spends the excess cash and capital, records the expenditure made by the research and development division for 5 years and the advertisement spending for 3 years. Also then reverses the depreciation expense due to unnecessary bookkeeping, treating the restructuring cost as an investment that needs to obtain returns and the like. As a result, EVA provides the most definite, comprehensive, and inherent indicators that compete with a firm's actual performance and its intrinsic value. First, EVA Spread or EVA divided by capital. Measuring the EVA result against the capital mathematically, this is equivalent to a difference between a firm's capital returns and average cost of financial consideration for capital. The spread that gets wider indicates greater productivity of a business model in changing capital into economic profits. In general, the wider EVA spreads also result in a high MVA spread. The second one is EVA margin or EVA divided by sales. The remaining percentage of sales after calculating all operation costs, capital costs, depreciation, amortization, and taxes. This is a margin of actual net profit or bottom line divided by overall total. And therefore, this model is more inherent to be compared in most more business lines, firms, and industries compared to the normal operating margin. This also neutralizes the comparison between low-risk service companies, such as Walmart engaging with small capitals, and high-risk capital, such as Intel. This model is fully able to identify the value of excellent asset management and reach the standardized business model at a higher speed, having the EBIT or EBITDA margin. As a reference, for the last 2 decades, the Russell 3000 companies, mostly obtain an EVA market of 0.5%, around half of all companies gain immaterial or negative EVA earnings. The 75% EVA margin is at 4.5% and the 90th percentile is at 9%. And the third one is EVA Momentum, or EVA divided by trailing sales. The change in EVA in a certain period is denoted by a percent of trailing sales in the prior period. Generally, this is the EVA growth rate that is adjusted to the business size measured by sales. This is the only ratio in all businesses, finance, or greater investments which reflects good points, and the greater the ratio is, the EVA will get greater. It includes measuring the margin performance that doesn't have an average value, such a case in a positive things. In the negative EVA, that is reversed into less negative. This case is also considered as a flat or decreasing for profitable businesses, whereby the business model is tiring or under pressure. It is better to expose the trend and turn around to find the correct point that deserve to be noted instead of other growth indicators. As a reference, the EVA momentum is mostly long-term for medium-sized companies that are equivalent to the Russell 3000 of 0.3%, indicating that the market tends to the competitive EVA for margins. It indicates 1 to 1.5% in the 75% and 3 to 4% for the 90th phase. Apple, as an outlier signal, has calculated around 6% to 8% of EVA momentum per year for the last 6 to 8 years. So, everybody whom I love, that's the all things that I can summarize and send to you today. I hope we can meet again in the next times. I'm Dadang Prasetyo Jatmiko, and I'm very proud to share everything with you regarding the financial process. Assalamualaikum warahmatullahi wabarakatuh.